The wonderful world of Bitcoin. It's a fun world because you can make outsized returns, but sooner or later you probably have to sell or hedge your position. Is that time now? That's what we're going to cover today. Let's dive in. So this is from Jason Bazzino, but I've seen so many people actually do a similar chart, and it shows the trend line from the cycle tops. And the summary is we reject the cycle tops, and this acts as a resistance, and we come on down. With some expecting we fall on down now based on this. Take this data out, and we don't go as low, of course, as the previous cycle, but it's all over. We've had the same kind of play, and now it's all over. I do not expect this at all. And I'm going to cover Ben Cohen, Jason Bazzino, Raoul Paul, my own views, and this actually represents a whole lot of views from others as well. So let's dive in. Let's go and check out why I think what I think. This is very important because this shows us the daily exchange volume, 7-day moving average. When it's high, this is a top. And this, you could kind of look at this and think, okay, well, this is a local top. This is probably a local top as well, potentially. But when we go out and zoom out, why is it that in 2021, there was more daily exchange volume now, considerably now, than there is now? Now, maybe it's because more people are using DEXs. Maybe this doesn't contribute to that. I'm not entirely sure because I am sure because it's going Binance, Coinbase, Bitfinex, and more. But I don't think it's like that. Yes, there's a lot more on-chain volume, and maybe there's something better that we could use in the next video when we work out where things are going. But the vast majority of volume is done on these exchanges, and newbies will use them for sure. Another metric we can use is just Bitcoin interest, just Bitcoin and crypto interest. Here you've got this peak in 2021, now nothing. Do the same thing with YouTube. I had a lot more views last year. I was spending more time on it, of course, but I had a lot more views than I get now. And yes, I can change some things and improve that, but it does indicate the actual interest in the markets. That's that. Now, this one is something that I've seen many people reference, and Jason's referenced this, and we're just talking cycle low to cycle high. So if this plays out, cycle high October 6th, there, that's it, all over Red Rover, which means we go to breakpoint in December, and I hope you're going. We go to Abu Dhabi in the winter when it's still really, really warm. We have a good time, and we're just wishing that we hedged our bags, that we sold some Bitcoin, etc. I don't think that's going to be likely. We'll go over that more shortly. I don't think that it's the same that things will be matching so well. I think this was more coincidental, to be perfectly honest. That's what I think, but maybe I'm wrong, because who is right? Another thing is from the swing low to swing high in terms of the end, it's the Jason Bazzino said 20 weeks in the past, in which case this puts our end date 25th of August, which we can see right here. 25th of August. I also think that is incorrect, but it's worth considering because this could be an analysis I'm presenting to you and you don't agree with some of my another analysis, but it leads you down a path to work out what you think is right. At the end of the day, we just want to be told what to buy, when to sell, when to buy some more, whatever. And it just doesn't work like that, unfortunately. This is the big thing, though, that Ben Cohen has pointed out. Bottom in September 2023, bottom in August 2024, quarter threes are notoriously weak, is his expectation. We'll have to see if this aligns with other people's data. His expectation is something like this. Come on down and then start to move up quarter four. That's what he's thinking. However, in general, we're probably going to have a bit of a rocky time until Wednesday, June 18. Once we've got the FOMC meetings done, federal funding rate, unemployment claims, all this kind of stuff, it's going to add more certainty to the market. So this was an expected kind of turbulent time, I guess you could say. Even if it's not super, super turbulent, Sol's nowhere near its 290 high or 300-ish high. We're like half price Sol, which is cool. You can buy more and stake more, but in general, it's not what we want to see. When we overlay this with M2 money supply with an 85-day lead, then we can see we're at this kind of period where we could come up or we could come down slightly soon until June 18, and then we rock it up. And that is certainly the case. We could have just been, more people could be aware of this thesis and could be thinking, you know what, we're going to come on down till June 18, I'm going to stay down. And we could come down a little bit lower, and then up we go. Let's move into some of the analysis from the Real Vision team. Real Vision, Global Macro Investor, etc. This is a simple system, and we covered in a previous video, which you're welcome to watch. Probably a good idea to do so. Global M2, 12-week lead versus Bitcoin, bottoming zone, up. We only have 12 weeks lead worth of information, but we do think that things go up higher and higher and higher. In the daily news video today, the opening tweet was from Raoul Pal talking about demographics. It doesn't last forever like this, but demographics mean more and more people are not having more children. So the population's declining in terms of growth, which means the only way to offset this GDP debt, all this craziness, is to print more money and debase currency, which means cryptos really are our only out for those early enough and for those that have conviction. I'm still very much in belief that the banana zone is a real thing. And we're just here. We're here. We still have these 2 fantastic times to come out, and they could take a little bit longer. Curb has also pointed out something simple. Solana has been following the M2 as well. It's been following it pretty damn decently, with the exception being here, where we just rocketed up with max extraction related to meme coins and whatnot. But in general, it follows pretty well. It's probably not going to be outperformed by ETH. Like ETH would go up probably pretty soon. It's certainly looking like that, but it still has a whole lot of room in the tank for it to go. But Sui will probably beat it in terms of like buying now. But there's more risk with Sui. Now this I don't necessarily agree with or like, but I'm just including it. Sometimes, like without giving us all the information, maybe we're just kind of just throwing in random charts, to be perfectly honest. But there's a correlation here with the S&P 500, and Bitcoin's very correlated to that, 1996 to 2001. The thing is, this would point, if we're going today, right, this would point that we are currently in, well, 1998. So now we're in 2025, which would mean this is 2026, and this is 2027. And I don't think the market looks anywhere like that in 2027. This is also from Real Vision, Jamie Coots, the bullish liquidity super regimes. And that is M2 breaking out. You know, it comes up, resistance, comes down, comes up, comes down, comes up. This is a breakout pattern, which we've seen indicative here and indicative here. And it's likely that governments are going to turn on the money printers, and US dollar go down in value potentially, which would be good for many things. And yeah, and just in general, unless you're earning US dollars, of course, but in general, the money printers come on, or the rates come down, and more money's kind of put into the ecosystem of crypto and just worldwide assets in general. That's the point there. The other thing that's really, really important is the ISM, which is a manufacturing survey. And this is a number of industries reporting growth, which 11, this is a new cycle high and strongest reading since July 2022. This is the strongest reading. The US, even though they don't do as much in manufacturing anywhere near of what they should do, and when I went to New York, I enjoyed my time, but like I wouldn't want to live there. There are some really cool places in the US, and I digress, but it's a bit of a troubled country, to be perfectly honest. But it does have like talent. It does have a huge amount of money. It does have Wall Street. It does have stock markets. It does make the world kind of move. They have the biggest, most powerful military. So this is relevant. This is very, very relevant. As per Raoul Pal, and I accept what they say. It just makes a lot of sense. This whole thing we won't go over, but this is talking about the ISM is a new industries reporting growth, but there's another thing which is referring to like the actual score. And Raoul Pal said in the SUI chat at the SUI conference in Dubai a month or so ago, he's expecting this to bounce back up to like 65. High. Manufacturing will happen and grow in the US. I think it will as well, because Trump wants manufacturing, wants jobs in the US. His administration want this, which means even though you can't create a new plant very quickly, you can make things work somehow, tax breaks and whatnot. This is a cool post as well, because this is January, so quite some time ago, January 22nd, but like the interest in watches, it just dipped. And Raoul's point of view is it follows the ISM, which is still below 50. Same as alt season, same as NFTs. All as a function of the business cycle and increased earning, not necessary gains. That comes later. I've done this before. I've done this many, many times actually, and a lot of people in crypto have. You have a lot of money. If your bags go up, you think, well, I can afford this, I can afford this, I can afford this. I did this before the February crash of Sol down $290 down to $100. And it was a silly thing. I should have taken out some funds and bought a car. Let's have a look at this next chart. This is what we have to beat. This is our trend line that we have to beat. And this is where we've got support and resistance. So resistance, resistance, support, 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 currently resistance. So if we come above it, fantastic. We need to go up here. If we break down from here, then we go down. And this is what we would look like. If we hit off this and we keep on coming down, then yeah, we come on down until we touch enough times and things look good again, and then we explode up. But if we keep on going down, this is kind of our trend line. And I don't necessarily think that we go down this low necessarily, but we could. We need more data. Of course, we need more data. And when we have more data, then like it still looks very, very good in terms of so many things. But short term, I think this is very, very relevant. Now, this is what we're looking at in terms of this time frame, this very, very recent time frame from our swing low to our swing high, this around like 19th of May, something like this. As we come on down, we've got this trend line here, and we can come up and we can bounce off and keep on coming down. But at the same time, we're down here and it's kind of bearish. This is not where you want to set your DCAs yet. James Wynn will go and happily just long everything. 0.5 level, you take that and then things are like, okay, this is exciting. Until then, it's not exciting and we're not. But we can zoom out as well. We can take the previous swing low and the swing high, in which case we come from here closer to the beginning of May, in which case we are above the 0.5. So on this broader time frame, we are doing okay. Especially if we stay here, we're doing okay. And if we come back even further, then we're certainly doing very, very well. And if we come down, if we touch the 0.5 and we bounce off it, perfect. Especially if we come on down and if we touch and we're still okay and it bounces off, fantastic. The market's still doing really, really well. So that are the different viewpoints from like Tyler, my TA dude that's doing all this research, with the fib stuff at the end, which largely is what Jason Bazzino and Michael Bazzino talk about. Ben Cohen, he's got his viewpoints. His viewpoints, by the way, like they've been right throughout the bear market. I'm seeing them less right now, to be perfectly honest. And Roll Paul and his team, so many things are indicating that they're on the right track. The summary is, no one really knows exactly what's going to happen. We all have different thesis points. But one super important thing just to keep in mind is that the lack of interest in something which explodes with interest indicates that the cycle top is not in. So I think it is a good time to stay in there, to learn some skills, and to not give up on crypto. That's my point of view. So there are some views that you can take away. And then let me know in the comments. Do you disagree with the analysis? Do you agree? If you're expecting someone just to say, long here, 20x leverage, well, that's just silly because we don't want to do that. But is the bottom in? Not necessarily. But is the top in? I don't think so. I think we go much higher, and I don't think the downside risk is too low. If you have some spare capital, you may want to work out where you deploy. Maybe some at 100, 104, 95, 90 if we get that low. Plus, there are other coins out there as well. But altcoin season, it's coming. We're not sure exactly when, but soon-ish, I kind of feel. But then Ben Cohen says it isn't. So there's so many things we have to look at, and we are looking at this every day. So I hope you like this content. If you did, subscribe, because very few of you are actually subscribed to this channel that are watching this, and like it, and just let us know your thoughts. If you want other analysis like this to be done, let us know as well, because it was fun to make, it was fun to research, and it did give us a lot more certainty into what we think is going to happen. Thanks for watching. Catch you in the next one. Cheers.